Crypto is not a currency, it is not an investment. So what is it? Most crypto is not money in practice, and it is not traditional investment. If that annoys you, good. Give me 5 minutes. By the end, I will give you a 10-second test you can use on any token. This is where people get hurt, treating speculation like currency or an investment. If you are in crypto right now, this will tell you what game you are actually playing. So here is the real question. What are people actually buying? A lot of people are buying a story and a price chart. First, I'm going to define what money has to do. Money has 3 jobs. You spend it, you price things in it, and it holds value without acting like a roller coaster. Can you spend crypto? Sure, sometimes. But let's be honest. Most people are not paying rent with Bitcoin. They are staring at charts at 2 a.m. like it is Netflix. Just one more candle, then I will sleep. In real life, most holders don't spend it. They hold it and hope it goes up. Here is the simple test. If you have to convert it into real money to use it, it's not money. If I need to swap it into dollars to buy a sandwich, guess what? That sandwich is priced in dollars, not in cryptocurrency. Most prices are not written in crypto. They are written in fiat currency, then converted. That is not a currency system, that is conversion feature. Now be honest with yourself. Would you rather spend it today or hold it because you think it will be worth more tomorrow? That answer tells you whether it behaves like money. Now people say, okay, fine, but it is an investment. Slow down. Words matter. With a stock, you own a business. With a bond, you own a legal promise of cash flow. With real estate, you can earn rent. And with gold, it has steady demand from jewelry and industry, plus centuries of trust, and it is rare. Most tokens give you no ownership of productive business, no contractual cash flow, no claim on assets, no earnings, often no legal obligation from anyone. So when someone says, I am investing in a token, what they often mean is, I'm buying this because I think someone will pay more later. Can you make money that way? Yes, but let me label it correctly. That is positioning, that is speculation. Try this. If the price doubled tomorrow, what changed in the real world? More cash flows, more earnings, or just more people showing up to buy? And before someone says, but staking, if your return is paid mostly in more of same token, the real question is still, where does outside demand come from? Now, here is where the confusion starts. People hear blockchain and assume that token is backed by technology. You have to be careful here. Blockchain is technology. Tokens are product built on it. Owning a token usually does not mean you own the network, the technology, or any profit or revenues. Let me make this simple. Saying it is backed by blockchain is like saying, my business is backed by Wi-Fi. Nice story. Are you profitable? Blockchain can be useful. This does not automatically make every token valuable. The internet is useful too. That does not mean every app deserves $1 billion valuation. If you do not own the tech and you do not get cash flow, what are you really trading? You are trading the price? So what drives it? Here is the truth. Ignore the price chart, ignore the hype, what's left? For most tokens, price is driven mainly by supply, demand, and narrative momentum, not earnings, not dividends, not production. More buyers than sellers, price goes up. Demand fades, price drops. Not evil, not angelic, just mechanics. So what category fits best? Speculation. Say this with me. Speculation is not investing, it's betting that future demand will be higher. Or in easy words, you are not buying an orange tree, you are buying oranges, hoping oranges go viral. At this point, someone will say, okay, but people get rich from crypto. true. Let me talk about where that profit actually comes from. And this is where critics mess up. Yes, people make money in crypto, but often they make money because someone else pays more later. That works until demand slows. This is why crypto often behaves more like collectibles, rare assets, and momentum trades. Put it this way, you are not buying a cash machine, you are buying a hot potato, hoping it gets hotter, and sometimes it does until the market decides to humble everybody. And before anyone says, what about Bitcoin? Let me address it quickly. Bitcoin is often pitched as digital gold due to scarcity, decentralization, and store of value narrative. Even then, it still does not produce cash flow. So the price is mainly a function of adoption, liquidity, and belief. Basically demand. So yes, it can work as a speculative store of value bet, but it is still not a traditional investment with earnings underneath it. And that leads to the next point. A lot of people think ETFs changed what crypto is. They did not. They just made access easier. Crypto ETFs did not create earnings, no dividends, no cash flows, no productive assets. They simply reduce friction. More access means more liquidity and potentially more demand. But the asset did not transform into a business. Put it this way, an ETF is a smoother shopping cart. It does not change what is inside the cart. So here is my position. Most crypto is not money in practice. Most crypto is not a traditional investment. It is a speculative asset priced mainly by belief, narrative momentum, supply and demand, not by cash flow. If you treat it like speculation, fine. Confusing it with currency or an investment, that is when people get hurt. Here is the 10-second test. If you cannot explain its value without relying mainly on someone will pay more later, you are not investing, you are betting on demand. If you want the gold version of same idea, I break down a simple question. Did you buy an ETF that is actually backed by gold, or did you buy a fund that just tracks the gold price? That video is right here. If you want the bigger picture of why I trust gold at all, that one is right here. If you want simple, honest conversations about money, like and subscribe. I will see you in the next one.